Welcome everybody to the weekly game plan. We're going to be discussing the markets. We're going to be discussing fresh trade setups and trade ideas. Then I'm going to be breaking down your guys' questions. Okay, I hope you all had an amazing weekend. I had a wild weekend. Follow me on Instagram if you want to see some of that. Okay, but let's get right into it. S&P 500, having a nice recovery. Monday started off with a gap down, or Tuesday, I should say. Wednesday, gap up, push up. Thursday, a big squeeze. Call options were super underpriced on Thursday. And then Friday, a gap and crap off of a terrible jobs report. So the jobs report was really, really rough. Market probably pressed higher. A lot of people are saying that the market pressed higher because of rate cuts. And while that is true, I think they just wanted to squeeze some more shorts real quick. Squeeze out some shorts, give that opening range breakdown, and then sell off. Okay, so moving forward this week, as short as tomorrow, I made a gap video over the weekend, and the gap from Thursday did not offer support on Friday. So we want to see if that gap is going to still act as resistance, or if we hold above it, that's short-term bullish. So as soon as tomorrow for futures trading, for day trading, for short-term swings, if SPY is above 649, bulls are in control. SPY underneath 649, bears start to gain a little bit of momentum. Bears really gain momentum underneath Friday's low. In terms of candlestick structure, this is what's called a dark cloud cover, where we started to, we gapped up and then we pierced into Thursday's candle. Okay. It's not super bearish because we had a decent lower wick. Buyers really kind of stepped up from the lows. Not a lot, but they rallied, 0.6% from the lows, which is decent. And so moving forward this week, keep an eye on that gap. And then the weekly expected move. This is really critical because last week we gapped down and tagged the lower edge of the expected move. It was right near that like 635 to 636. Market rallies up, cool. And then it tagged the upper edge of the expected move. Guess what though? Throughout the week, price did respect the weekly expected move. On an intraday basis, it didn't give two craps about daily expected moves. But the weekly expected move is holding strong. So we have a $9 expected move this week, give or take, plus or minus 50 cents. The upper range of SPY is going to be 656. Okay, so this could be an area to take bear call credit spreads against, especially if we're tagging it early in the week. Okay, if you're daring, maybe you could short or buy puts. But the market likes to cook all the bears. Bears really haven't gotten too much follow through. Every little dip has been met with stronger buying. And so I have to say, I have no strong opinion on the market. I could totally see it breaking support and crashing. I could totally see it making another new all-time high and grinding higher. It's a tricky spot. So that's why we're going to focus on relative strength and relative weakness. The lower edge of the expected move this week is SPY 638. Okay. Briefly checking in on other markets, IWM, nice and strong, a bit of a high wave candle, a doji candle, indecision on Friday, but a bit stronger on the IWM. That is bullish for the market as that is showing more breadth. QQQ, no red flags really on the QQQ. Long term, you guys, I think QQQ is like some of the best investments to dollar cost average into. That's not financial advice, but tech isn't going anywhere. Tech seems to keep building upon those margins. We all need tech, and tech's only going to get better in the future, barring some crazy disaster recession. And even if you can survive that recession in the long run, the QQQ, I think it averages 15 to 30% per year going out, here on out. Okay, so NASDAQ looking strong. Semiconductors looking just kind of flat. Semiconductors would be bearish if SMH broke underneath this 280 level. Otherwise, it's kind of just range bound. Maybe there's an all-time high breakout setup over 303. You guys have known that I've been talking about AVGO for a long period of time, especially down here in the 160s to 180s. AVGO, big gap up, gap and crap. AI did predict that earnings really well. It said neutral / bullish. It gave a price target of 320. It got as high as 356. So it was more bullish than AI thought. NVIDIA not really doing too much, but if NVIDIA could get oversold down to this 146 level, we would need a decent market correction for that to happen. But that would be my buy zone. Again, none of this is an offer to buy or sell any security. I'm just drawing on some charts. which come with limitations and difficulties, right? Looking at the VIX, the volatility and fear index, gets these little spikes, but then sells off. VIX, it really needs to wake up if the market is actually going to sell off. Otherwise, no red flags just yet. And I'm sure you can find multiple studies that have red flags, of course. I'm just saying from a chart perspective. What I will say is VIX has a bullish divergence. RSI is making higher lows as price has been making flat to lower lows. So that is bullish for the VIX, bearish for the market. It just comes down to how long does that divergence play out. You know, you can take a look at the S&P 500 and you can see that there's still this bearish divergence where RSI is making lower highs, but price keeps making higher highs. It doesn't mean that the market drops right here, right now. It just means that there's storm clouds ahead. Storm clouds ahead, but it's not raining or storming just yet. This divergence could get burned through if the RSI breaks out on that trend line, okay? And SPY makes a meaningful higher high and holds above those highs, okay? So basically my thesis is long-term I'm bullish. Short-term, really tricky to navigate. I have to see the order flow. Medium-term is also uncertain due to these divergences, but the trend is still intact, okay? Let's get into some trade ideas real quick, and then we'll discuss your guys' stocks and questions, okay? So trade ideas, part one. Let's talk about Amazon real quick. So Amazon just starting to break out of this base over 233. It did have a bit more of a reversal on Friday. Amazon looks bullish if it can break above 236. And I would probably day trade calls or maybe swing trade calls to see if we can't test or break above all-time highs. I'd need a lot of market strength. That's kind of like a C setup for now, but that can change as the chart structure changes. Google, super bullish. You guys know that Google is my top investment, my top holding, and I'd love to add Google. I actually sold about half my Google when it was at 230. Maybe that was the right decision. Maybe it wasn't. But Google, I'm leaning neutral / bullish this week. So if we take a look at Google over here, expected move is $7.44. I might look at selling like a bullish iron condor, selling an at the money put credit spread, and then like an out of the money bear call credit spread. Okay. That's just an idea for now. That's like a B setup. Okay. Next up is Tesla, TSLA. Tesla starting to break out of this wedge. Volume's not the best, but it's not terrible. Elon Musk getting that $1 trillion package if he can get the market cap to what? Like $9-10 trillion. So Elon Musk is incentivized to pump up Tesla. Let's see what he can do. Tesla stock does look more bullish than bearish as of right now. Tesla would be super bearish underneath 315 and underneath 300, but right now it's neutral / bullish. It gets more bullish above 355. Okay, so set a price alert above 355, and you can average up on that trade if it's really starting to break out and volume's coming in. And I would look at potentially targeting the 405 level on Tesla over the next coming weeks and months, as long as that trend is intact. So Tesla, good day trading stock. Check it out. If you're looking for a short setup, look at PLTR. I took some bearish call credit spreads on PLTR when it was at the 162 level. I closed those on Friday. But looking at PLTR right now, this is a bear flag, drop, bear flag. If PLTR breaks underneath 150, that's kind of the price trigger, and you get a nice rise in volume, PLTR could probably test lower, at least down to the 140 level. But if the market actually turns bear, that can push PLTR down further because it has a higher beta. So it's going to get whacked a lot more than the overall market. Okay. So 120 is that longer term target on PLTR. I'm not like a PLTR bear or anything. I just trade the price action, right? It is mildly overvalued. Fair value is about 115 per share. So if you see a PLTR trading underneath 100, that's an okay value, but I like to look at other stocks and sectors. Okay. If you're looking for another bearish setup, AMD actually just confirmed Friday. It was a gap and go to the downside on Friday. We gapped underneath support. So whenever you gap underneath a critical support level, that tends to favor a decent down day. Okay. Just as if you gap above a resistance level, it tends to push higher. Okay. So AMD, if it could retest something like 160, this is the resistance to potentially short against or go bearish on, or you could go with some late October bearish call credit spreads. And as long as AMD closes underneath whatever you set that price as, that could be the trade. So let's check the options chain. I'd look for bearish trades, try to go late October. Okay, for bullish trades, go for the December expiration or late 2026 expiration. That's my thesis as of now. But AMD, something like selling the 160 call, buying the 162.50 call. I'm going to get 77 cents of credit. And as long as it's underneath 160 by October 24th, I'm going to get that $77 profit. And this is only going to take, $180 in buying power, give or take. So a decent return if AMD can just close underneath that level. I can also build into the trade if I want to, but that's just an idea for now. If you want to balance out your deltas and hedge a portfolio, that looks okay. Coinbase, similar thing to PLTR, flat support at this 293 area. So Coinbase bearish underneath 293. Okay. You could look at put options, bearish put debit spreads, bear call credit spreads, you name it. Stop on that trade would have to be above 315.50. Okay. Next up is IBM. IBM. Breakout over 246. You could sell bullish 246 bullish put credit spreads this week. As long as that 246 level is holding, stop on that trade would be 242. Okay. Next up is UNH. We've crushed it on UNH this year. Double dipping on this one. First bought this dip down here right at the lows. Sold. Got a nice good dip buy right here at 250. Sold on that fat ass Warren Buffett gap up. Now UNH is basing out. And if you guys followed my analysis on UNH, I said UNH probably goes sideways for a bit. And that's exactly what happened. UNH looks bullish right now. And if it breaks above Friday's high, 317, I'd be looking at calls, call debit spreads. And if you're just an investor looking at shares long, look at that dividend, 2.21, $2.21 comes right back to you every quarter that you hold on to the stock. And longer term, I'd be targeting the 377 level on UNH. I do think at some point this gap gets filled. If it goes really bullish, sure, it could go up to 583, but I wouldn't get too greedy. I would just target the 380 level on UNH. That's 21% upside. If you go with a tight stop, it's a 6.4% stop loss. If you go with a looser stop, 18%. If you go with the loose stop loss, 26%. Okay? So that's on UNH. Next up is CRDO. CRDO, strong uptrend, parabolic uptrend. With this one, I like to actually use tight stops when the trend starts to accelerate, just because at any point the trend could reverse hard. But if it just keeps going and starts to accelerate upward further, that looks good. I did start a starter long position on this January 2026. I bought an in-out call debit spread, buying the 135 call, selling the 140 call. I paid about $220 for this. And what's cool about these in-out spreads, these debit spreads is, your risk is capped. Your profit is capped, but I can make about 100%. So 220 turns into 500. That's over a 100% gain. And I just need it at this price or above by January 16th, 2026. So I like those spreads just because they're kind of set and forget trades. But this would be a long over 142.50. Stop on this would be a daily close. So a time stop, daily close underneath 133. Okay. Next up is Shopify. Let's check it out. Shop. So Shopify, big breakout on earnings, controlled pullback. Okay. Little bit of a liquidity sweep. Do you see that? Where it makes that support level right here, bounces, breaks that support, wicks back up. It's a double bottom liquidity sweep. I'd be neutral/bullish on Shopify this week. And if it breaks over Friday's high, I might do something like sell a bullish put credit spread. Sell the 146 put, buy the 143 put. Look, I'm going to risk, about $185. I'm going to get $115 if it closes above 146 this week on Shopify. Just note that most of these trades will get destroyed if the overall market breaks down, okay? These trades would get destroyed if the market breaks down. So I'm really being cautious on the swing long setups. I got to be really, really picky. As always, what I usually do is I analyze the chart, I wrangle it with AI and give a probability analysis just to kind of get a little bit more edge. AI isn't perfect, but it does help filter trades for me. And what you do with that is you just throw a bunch of charts into ChatGPT, wrangle it a little bit. You can use the new finance thing on YouTube. Not on YouTube, on Google. I'll be giving you guys some updates on that. But just filter out your trades as best you can. And if you're in victory trades like you guys are, just tag me if you have any questions or if you're looking at a trade and want my real-time opinion on it. Okay, so that's Shopify. Long over 148, stop 133. That's kind of right underneath the consolidation. So your risk is about 8%, but maybe you could revisit the highs or further. I do believe that that's all-time highs for Shopify. All-time highs, nothing bearish about that. Next up is going to be AM. Okay, this is a long over 1828, stop underneath 1777. Not good options for the wheel. Okay, not good options for the wheel. The way to play this probably is go out to October 17th and just buy the 19 call. It's going to cost you about $20 or 20 cents. And you can see if that can maybe get in the money and get up to 90 cents. So potential 4x return if you grab that call option and you keep the risk in the premium. You just let it go to zero if the stock can't really gain some steam or momentum. Okay, this does pay a dividend as well. So that is something to consider if you want to grab long 100 shares and maybe do something like sell the December 19th 20 strike covered call. Okay, if you do that, it's like you're selling at 20.20. It's like an 11% return in just about 3 months. And you get that dividend as well. Okay. Keep an eye on like SPX trades, credit spread trades, you name it. Friday was a good day selling credit spreads. Just basically saying, hey, SPX, I think you're going to close underneath 65.10. And that's very likely given the drop. And then Fridays tend to chop. So we got 2 back-to-back Friday wins on SPX credit spreads. Keep an eye on that. Gold was a monster win last week, you guys. Go on freaking YouTube. And it is not easy, you guys, to make a video and saying, this is the trade to size up on. This is the trade I'm going heavy on. We took 4 times the regular size on gold and silver and wheat and precious metals. The next big trade, gold calls. Look at this. Look at where gold was. 318. It's at 331 now. Okay. So gold was the play kind of the year. There'll be other plays. I just need a really good setup like on gold. But gold moving forward, if this can dip back into 317, that's a great support area that I'd like to buy more at. Long term. Okay. Long-term spreads, you name it. Okay. So gold, if you're thinking the entry's a bit late, you can always just grab like leap call options, leap call spreads, leap bullish put credit spreads, GLD shares, GLDI for option income. It does all the work for you. Okay. Next up is going to be PII. PII, flat top, higher lows, long over 60.52, stop goes underneath 54.45. Okay. Options are okay on this. PII, you could grab the 60 strike call for $230. This does pay a dividend though if you want to just grab shares. That's what's nice about it. Next up is Reddit, RDDT. Reddit held the higher low pivot kind of where I was saying it would. Reddit, nice pullback. I did note that you could sell bullish put credit spreads at this 218 level that paid. I didn't take that trade, but I'm just noting it. That was the setup. Reddit now, this is a breakout setup. Breakout over 241.42. Stop goes underneath 212. And you'd see if you can get all-time highs. You could go with calls, but calls are expensive. So what you can do is just grab a call debit spread. You know, buy the 240 call, sell the 240, 250 call. It's going to cost you $115. $115 turns into $250 if you take that bullish debit spread and it closes above 240, 250 this week. So all you need is really like a 1% up move. Yeah. 1% up move this week and you get the max profit. Okay. Next up is DGX. Again, bullish chart, kind of a kicking reversal over here. Does pay a dividend if you like shares. Options are not liquid. Do not trade options on DGX. That's long over 184. Stop goes underneath 177. Super simple. I don't see any trade setups on oil, but we made some good money shorting oil. Again, we had the bearish kicking reversal right here. This is where I bought USO puts, put debit spreads, alerted it to members. Boom, we get a drop that day, and then boom, take profits into Friday. Nice drop on oil. I'd remain neutral / bearish on oil over the next coming weeks and months. So if you trade futures, you can trade forward / CL for crude oil futures. You can trade MCL, micro crude oil futures. We made money off SCO long. This goes up when oil goes down. SCO from 1685, getting a 5.5% move up. Looking good. Okay. What questions or stocks do you guys want broken down? Hit me up. This is the time. Oh, I love that, Brandon. This is good. Yes. That's going to be us this week, right? If we execute properly, manage risk, let our winners run, size appropriately, that's what we're going to be looking like, okay? All right, let's check it out. Open. So Open was a stock that I was saying you can probably wheel for a period of time. Open, getting a really good breakout over 2, goes all the way up to 5 in just one trading day. Got a small win on it. I didn't really want to get assigned. I should have just taken assignment because it did eventually squeeze. Open, the momentum probably continues, but just be careful. This is a really risky stock. If it got really extended for multiple days in a row and I get like an exhaustion bar and then I start to get signs of a reversal, it would actually be a short for buying puts with a stop loss above the highs. You could wheel it. It's risky, but you could. It's tricky because I can't really put a value on open door. Wild. Yeah, that's my thoughts on open. Trend probably continues. Watch short-term support at 6. If it loses 6, it's probably going to test something like 540. If it loses 540, it's probably going to come crashing down or just slowly bleed. All right, let's check out RCL, Royal Caribbean. RCL is one of my not good trades this year. Been trading it bullish for the past 5 years on RCL. I've been trading for 9 years. It'll be 10 years in March of 2026. But RCL has a lot of relative strength. You can see the cruise lines, CCL. That broke out of its base, moved higher, retested, bounced as well. If there's going to be a top on RCL or the cruise lines, it's probably going to be close to here. If it breaks underneath 349, I would expect that to probably drop down to 331. If the market corrects heavy, I think that RCL probably gets down to this 320 level. Otherwise, if RCL breaks above 362, it's probably just bullish, probably wants to make another new all-time high. There still is a lot of resistance there. So RCL bullish above all-time highs, short-term bearish underneath 349. RCL is kind of like a consumer discretionary stock / company. You go on cruise lines when you have extra cash, right? And so as long as the consumer still has cash, excess cash, the stock will probably do well. If consumers need to tighten back because of inflation, the jobs market, you name it, RCL can probably get hit hard. So that's my quick take on RCL. PJ's asking about Barrick Gold. Yeah, this has been on a strong uptrend. One dude on the Victory Talk podcast is saying, I want to short Barrick Gold. I'm like, are you kidding me? Why? It's working. That's like saying a brand new car, I think it's going to break down as soon as I buy it off the lot. Or that's like going bullish on a super crappy car that's just breaking down and falling apart. But yeah, I'm glad he didn't short Barrick Gold. He paid $2.99 in a super chat on the Victory Talk podcast, and it probably saved him hundreds, if not thousands of dollars, because we said bullish. Stock's going up. So Barrick Gold, it does have good premiums. The premiums are okay. They're fairly priced. There's not a huge edge to wheel Barrick Gold. However, I think it's a decent wheel. You know, if you got $3,000 and you want to collect about $16 to $20 per week reliably, I don't think the stock really comes underneath $20 a share anytime soon. I'd like to sell 24 strike cash secured puts after a dip though. So maybe something like the October 17th, 24 strike cash secured put. It's not paying a lot right now, but maybe if I could get like 60 cents in premium, that'd be a decent trade. And if I were going to get 60 cents in premium, the stock would probably have to drop about 10%. We want to look at the underlying ETF, the gold miners ETF, GDX. And GDX, Indy was all over this one during consolidation. I said, yep, looks bullish, just like gold looks bullish. But Indy was on top of this. Nice rectangle breakout, move higher. Consolidation, this one was a nice one. Entry right there, stop loss underneath consolidation, move higher. GDX looks bullish as hell. I'd love to buy it if it could retest 58.79. Okay. And this gets into a quick lesson on building a core position and then adding to it and then taking profits on it. So let's take a look at silver. All year I've been bullish on silver. Okay. Caught some of these dips, sell on some of these moves, caught this breakout, sell into the breakout. I even bought even a little bit more silver, not at the best time. I got dumped on 3 days in a row really hard. Luckily, though, I gave myself late September expirations, and I said, hey, I'm buying more silver. Took some profits off for basically break even. Then when silver started to consolidate, okay, I'm leaving my core silver position. So let's say for me, that's plus one on, let's say I've got two calls, two like September calls. Okay. It starts to break out. I buy some more. Now I got 3 calls, right? Everybody's account size is different and everybody's position size is different. But then we start to break out, take profits, still hold your core position. Okay, we consolidate, add, take profits. You're still holding the core position, but you're just moving in and out with one contract. It's really good in futures trading if you can correctly identify a trend. You hold a core position. Maybe it's like 1 NQ long, and then you add an NQ long when it confirms. And then you take profits on that 1 NQ long, still holding the original. Okay? So keep your core position, add on the breakouts, take profits onto the spikes. And so silver, if it comes back into 36, that would be nice. Last week on the public YouTube video, I gave you guys Wheaton Precious Metals. Said looks bullish over this 100 level. Boom, gets up to 105.98. 5% gain in a week. Call options paid really, really well on that. Okay. Hanzo's asking, do you know how Brandon has 20 accounts to clone his futures trades? Yeah, so he uses Replicanto. So if you're on YouTube, you can check the description. But for Victory Trades members, we've got this where you get a $50 discount on it. Replicanto right here. I believe you just use code. It's an old affiliate code, but it still works. It's Legion 20. Okay? Legion 20. Check that out. Yeah, he trade copies, so it's just one account. All right. Next up, we're going to break down AAL, American Airlines, AAL. Little bit of a false breakout last week. Breaks out over 1366. Upper wick right there. Do you see it? Sells off. That's sound technical price action after the false breakout. Stock just looks dead neutral. I'd remain neutral / bullish on American Airlines. I think it's a good stock for the wheel. It's a great stock for the wheel. Look at this. The 13 strike cash secured put paying 75 cents in premium. Not too shabby. October 23rd is earnings. I like the 75 strike cash secured put for AAL expiring October 17th. Otherwise, short term, even the 13 strike cash secured put expiring this Friday. Maybe even the 1250 strike cash secured put. Be willing to take assignment and wheel it indefinitely. If you ever get super underwater on your shares, you can just roll out the covered calls. Go out to 2027, sell the 20 covered call. Boom, you've got like 10% of your cash flow guaranteed. And if it goes above 20, you'll get called away, but you get paid from 13 to 20. It's like you're selling at 21.15. You're getting a 61% gain. It does take a few years, but 61% gain, that's pretty simple. That's pretty cool. You're going to take a look at the JETS ETF, JETS. This is looking stronger than AAL for now, but keep an eye on that higher low trend. We are pinching just a little bit. You still have those bearish divergences on the RSI. No huge red flags, no green flags, just yellow flags. But yeah, that's American Airlines. I like it for the wheel. If you think it's a good price right now, let's see if we get a fair value from Morningstar on AAL. All right, come on, pull up AAL. So Morningstar doesn't like AAL as of right now. Morningstar says the fair value is $10 per share. Okay, on American Airlines. So maybe 10 strike cash secured puts or lower. So it makes me like it a little bit less because Morningstar likes it less. Let's check out UUUU, uranium. Beautiful move. How many of you guys made money from the uranium wheel? I got called away at 10.50. I'm cool with that. Because I was selling 10 strike cash secured puts. Kept selling some 10 covered calls, 10.50 covered calls. Finally got called away. Looks bullish. Neutral / bullish. I think you can continue. You can continue to wheel this. Okay? Yeah, uranium. UUUU. Energy fuels. September 12th, the 11 strike cash secured put looks all right. Okay? Or even the 10.50 strike cash secured put. That looks cool. Looking at UUUU, no Morningstar report. So mixed analyst ratings. You'd want to look at URA, uranium. That looks just fine. I've been waiting for this damn 34 level to hit. Market just can't sell off to get some of my bids. And that's okay. I'll be picky. But broke out. Now it's holding the breakout. It's holding the throwback. So I'd assume that goes higher unless it takes out uranium 69.50. But kind of just looks neutral as of right now. If you've got about $4,000, you could wheel URA if you're cool with that. That diversifies a portfolio, gets you involved in uranium, and you get cash flow off your $4,000. Or however much you want to put into it. It could be $40,000, $400,000, $4 million, $40 million, $400 million. Anybody trading with $400 million here? We'll get there. Let's check out Riley, R-I-L-Y. Looking a little bit more bearish. This is the FU pattern, the middle finger pattern, left shoulder head, right shoulder, neckline. Just more of a rollover formation. Only bullish above 6. Okay. Otherwise, bearish underneath this like 4.80. Short-term support 450. 380 would be the next support on RILY. 4-strike cash secured puts could probably be okay, but they're not paying a lot right now to sell a 4-strike cash secured put. What you could do is a put ratio. Now this gets advanced, but it's actually a really cool strategy. You get paid if it drops. You get paid more if it drops a little bit more. If it absolutely shits the bed and tanks, you might be underwater in the short term, but you still get paid a bonus. But what it is, a put ratio is it's a put debit spread plus a cash secured put. So maybe something like, man, the spreads are a bit wide on this. Maybe it's not worth it. This needs to be a little bit more liquid. I don't know if I can justify it. But basically what you do is you buy a put debit spread. And then what you do is you edit the ratio. You sell 2 of the lower strike. So it's like a cash secured put and a put debit spread. If stock just goes sideways or rallies, you don't make anything, but you don't lose anything. If it sells off just a little bit, you get paid a bonus, a huge bonus. If it tanks, you still get paid a bonus and you'll get assigned the shares, but then you can wheel it from there. A little bit more of an advanced strategy. Let me know if you guys have any questions on Riley. The put ratio looks okay. Only bullish above 6, though. You started wheeling AG for silver. Nice. Yeah, I think that's a great wheel. Nice job. Yeah. I like the 8.5 strike cash secured put. It's paying less than 1%, but it can probably open up. Gold futures are down slightly right now, /GC, but barely. Bitcoin futures down 0.25%. Bitcoin's just dead flat right now. Higher lows, flat top. Not much action going on in Bitcoin. Long term, I'm a huge Bitcoin bull. Not a huge Bitcoin bull. I'm just a Bitcoin bull. I like the 80 to 70K dip buy range for longer term leap call options on IBIT. Otherwise, it's just a dollar cost average. Short term, there could be a breakout over 114, but I'm not confident in it. It's still too choppy to be decisive. But yeah, in terms of gold, there's IAU. I had Bryce buy some IAU calls in her SoFi account. She made about 50%. It was pretty cool. She was happy with that. She doesn't do too much trading, but she's like, what trade should I take, Greg? Gold calls. That's it. Yeah. Okay. Let's see. What other questions do we have? How much is it to do the Apex trading accounts? It depends on the account size and the deal that they have. Right now it's 80% off, so it's like $37 for a 50K account. It's like $80 for a 150K account. That's why I like those 90% off deals the most. That's where you load up the evaluations and then you sparingly trade the evaluations when it's only 80% off. And then it's about $80 to $140 to activate your funded account, but then you have it for life. Okay? Yeah. We'll get to that 400 million money username. Oh yeah, can I explain what wheeling means? Yeah, so basically it means selling a cash secured put. So you get paid in the stock market to agree to buy 100 shares at whatever strike price that you choose. So let's say on American Airlines, okay, I see a support around $12 per share. So step 1 is identify a support level that you wouldn't mind owning 100 shares at. Okay? Now you get what's called a premium if you commit to buy 100 shares at that level. So for this week on American Airlines, if I agree to buy 100 shares at 12, I can go ahead and sell the 12 strike cash secured put. And the price right here is saying 0.08 to sell this put. Okay, so that means I'm going to collect $8. That is my money, guaranteed no matter what, if I hold this to expiration. So why would I do that? Well, it locks in my cash at a good buy price. If it closes underneath 12, the broker will take the cash and it'll automatically buy 100 shares at 12. That'll be my average cost. Technically, though, my average cost is what? 12 minus the $8 that I got. So it's actually $11.92. So if you're cool with owning 100 shares of AAL with an average cost of $11.92, you sell the 12 strike cash secured put. Now here's where it gets cool. It's called a wheel because you get cash flow around the clock, okay? And why is that? Because if you own 100 shares of something, for example, an alert that I put out a week or two ago, TCMD. I bought 100 shares of this stock and I did a covered call. I sold the 15 strike covered call. So what's cool about that? When you sell a covered call, it's basically me saying, hey, I'm cool with selling my 100 shares at $15 per share by mid-October. If I do that, guess what? I'm buying at 1340-ish. I'm going to take a 12% gain, but on top of that, I'm getting paid because I'm making that commitment to give up my shares. What's nice about it is it only takes 1 minute to execute. It's super passive, super simple. It's reliable, guaranteed cash flow. I know what I'm getting, right? I get paid to take profits. And if it closes at $14.99, guess what? I still keep all of my shares and I get to keep the premium of $20. And guess what? The very next month or whatever, I can sell the 15 cover call again. This time I'd get about $100 or 1.0. So that's cool. So it's a great way to cash flow a stock. It's great to do on stocks that you don't mind owning long term. It's great to do on stocks where you want to get paid to take profits. Ideally, you get better liquidity than TCMD. But regardless, it's just reliable cash flows. Like, it's one of the best ways to swing trade in the market because you know what you're getting. Let me know if you have further questions on the wheel. I also have a ton of videos on the wheel in the WAP courses. So lots of examples. What happens when you do get assigned? What happens when you don't? It's awesome. You know, stocks like RKLB, Rocket Lab, this has been a great wheel because look, the premiums are super high. Stock was just $5 per share. And the premiums each week are super high. So like this week, if I wanted to, I could sell the 43 strike cash secured put. It's going to take, because remember, you have to buy 100 shares. If I sell the 43 strike cash secured put, 43 times 100, I'm going to have to put up $4,300, but I'm getting a guaranteed $79 to commit to buy 100 shares at 43. If it closes at 43.01, guess what? I get all my $4,300 cash back on Saturday, the very next trading day, or the very next day, I should say, plus that $79. What's my break even? Well, it'd be about 42.21. So if I'm cool with owning this stock at 42.21, I can do that. And guess what? I can just sell covered calls. I can sell the 42 strike covered call. That's paying $500 the very next week. Yeah, get that WAP, wet ass profit. The VWAP stands for virtual wet ass pussy. All right. Yeah, you can do this on any broker. As long as you have options approval, you can wheel. It's cool. Great way to get guaranteed cash flow as long as you hold to expiration and take that commitment. Doesn't Riley have earnings? I don't see any earnings anytime soon. What about Hood? Let's check out Hood. Robinhood. Looking a little bit top heavy up here. It's tough to say. Just a bit more of a rounding top. It's been a strong stock though. I'd be bearish underneath 95. More so neutral right now. Maybe there's a breakout over all-time highs. I have no opinion on Robinhood. Unknown. Good question. No opinion on that one. Just mark your key levels. Keep an eye on volume. It is going up after hours, though. Look at this. Big pump. Robinhood just entered the S&P 500. Okay. That's bullish. That's bullish as hell. This is why the news tab is super helpful. Let's read this article live. S&P Dow Jones Indices announced a sweeping update to its benchmarks late Friday. 3 companies are joining the S&P 500. AppLovin Corp, Robinhood, and MCore. So let's check out App as well. So bullish Robinhood. Let's look for long setups on that. Generally, whenever you get added to the S&P 500, there's going to be some inflows to the stock. Okay? Good for Robinhood. That's awesome. Let's check out App. App. This stock is at 527 now already. App bullish. Breaking out to all-time highs. Looks bullish to me. Look for long setups on APP. And let's check out MCore. EME. Yeah, stock is trading now at 640 now in the after hours. Yeah. Lower volume on this name, but bullish. Maybe something like a bullish put credit spread. Sell the 640, buy the 630. Collect about 500 to 600 bucks. And if it closes above 640 on September 19th, you get the max profit. Looks like Caesar got kicked out. CZR. Stock doesn't seem to care. Caesar's Entertainment. They're in Vegas, right? I was in Vegas 5 years ago for the National Chess Tournament. That was fun. MKTX got kicked out. See, this is... Okay, interesting. Yeah, bearish trend. You don't perform well, you get kicked out of the S&P 500. That's why the SPY ETF is just so strong. They just cut out the losers and they put in the winners. They just get to rebalance their team. They constantly get to update their lineup. That's why it's one of the best ETFs in the world. That's why it's so strong. It's that rebalancing. They kick out the weak stocks. The strong stocks rise to the top. Good stuff. I'm glad we brought up Hood. Unknown. Good stuff. Any other questions, you guys? Let's get ready for a kick-ass trading week. No, if I do not send any friend requests. I accept friend requests from Victory Trades members, but if you're getting a friend request, it's not me. It doesn't mean I don't want to be your friend. It's just for safety protocols. Okay? So that's key to understand. The Discord, what happens is sometimes in the Discord, it's a big Discord. There's like 20,000 people in this Discord. There's going to be people that scrape your bios and then they reach out to people, try to get them to deposit into some crypto account. I will never force you or tell you to deposit money into an account. I don't care. Obviously, I'm preaching to the choir, right? Interesting. AVGO was added to the S&P 500. That's cool. Good for Broadcom. Good for Broadcom. Yeah. Look for long setups on that stock. And yes, this cat represents my sentiment for the trading week. The market's leaning more and more bullish. I'm just keeping an eye out on volume, keeping an eye out on VIX, being super selective. If you're not super confident in a setup, tag me. And just remember that cash is a position too. If you ever want to and you're looking for just, instead of opening up a high yield savings account, SGOV, that earns about 4.2 to 4.5% per year, and it pays out monthly. So it pays out like 0.38% every month. Those rates will actually be going down when the Fed cuts interest rates. So get that cash flow, that guaranteed cash flow while you can. And when I say guaranteed, technically there's no guarantees in the market. You know, an asteroid could hit Earth and then it would not be a guarantee, right? But government bonds are basically as safe as your savings account, give or take. Technically, by the textbook, the savings account is more safe with the FDIC insurance, but SGov is a great place to park cash, okay? It's a great way to stabilize a portfolio too. And then you can hold on to that. You can sell your SGov whenever you're looking to pick up good deals in the market, okay? Otherwise, dollar cost averaging into S&P 500, dollar cost averaging into QQQ, dollar cost averaging into IBIT, and then buying your favorite stocks at oversold levels is a great way to build long-term wealth. Even in bear markets, as long as you can survive the bear market and hold through it and get out on the other side. That concludes the weekly game plan, you guys. Good job last week on gold, on oil. Okay. Some expense trades on short trades, but gold and oil were 4 times the size. We'll get some credit spread trades. We'll get some futures trades. Yeah, mortgage rates hit its lowest point since 2024. Let's see what happens in the housing market. I'm excited to see how this unfolds. I'll update you guys with any further developments, okay? I'll be live trading tomorrow morning, 15 minutes before the market opens at 9:15 a.m. Eastern. Tell your friends about Victory Trades. Let's have some fun. Let's make some money. Let's learn something together. Peace out.